It's a sad day for Europe's climate clowns, as Germany's Supreme Court rules that potentially $840 billion in government slush funds are unlawful. So first, what happened? On November 15th, Germany's Constitutional Court, which is the highest in the land, ruled that the constitutional debt break rendered illegal a $65 billion slush fund that was using COVID money for climate projects. The ruling could threaten dozens of similar mechanisms, 29 in all, funding everything from crony semiconductor subsidies to crony climate subsidies to the war in Ukraine. In all, $840 billion of government spending could be at issue, which is equivalent to $4.6 trillion scaled to the U.S. This has now thrown the budget into disarray, with the ruling coalition, quote, freezing public spending for the rest of the year. The background here is that Germany has strict debt limits that were imposed after the 2008 crisis to calm the hard money German public that their government won't hyperinflate the money again. The rules require that new debt must not exceed 0.35% of GDP. In fact, last year Germany ran a budget deficit of 2.5% of GDP, and it is on track to use these off-budget cheats to run a deficit of 2.2% this year, which is about 7 times the constitutional limit. Now, Germany's economy is already having a rough time. I've talked about this in a recent video. Thanks to inflation, especially in energy, along with export weakness and a slowing economy that's affected by a flood of cheap Chinese goods as Beijing dumps hundreds of billions into its own struggling manufacturers. All these have taken German factory orders down 15% in the past 2 years. German GDP, meanwhile, has only grown in 1 of the past 5 quarters, and real wages are down 4% in the past year. In fact, Germans are even cutting back on food, down over 5% from last year. And there is no relief on the way. The entire German economy is forecast to shrink in 2023 and to limp along just over 1%, so barely above population growth, in 2024. Thing is, all that weak growth was with the $840 billion slush fund. So cutting it off could put Germany into even deeper recession. Of course, given a big chunk of that 840 was for the precise climate restrictions that are shrinking the German economy, in the long run it could be a good thing, but in the short run it's going to hurt. So what's next? Brought to you by Unchained. What's next is, given Germany's ruling socialists' ongoing obsession with the climate scam, they will most likely restore the climate spending, taking it from something with weaker lobbyists. In theory, they could raise taxes, but that's a last resort given one of the coalition parties is the pro-business Free Democrats. In other words, that could break the governing coalition. Or, of course, they could always fight dirty. There's a loophole in the debt limit for, quote, exceptional emergency or natural disaster. They played that card in 2020 for COVID and last year again for Ukraine. Whether it is loophole or fiscal shell games, my guess is Germany's socialists will do everything they can to keep circumventing the fiscal limits of their constitution. We'll see whether Germany's so-called traffic light coalition of socialists and pro-business parties can survive, but I'm guessing whatever they come up with will come out of the hide of Germany's dwindling industrial base. Okay, we'll be watching. See you next time.